In the past month, Tesla stock has fallen in value by nearly $300 billion. In this video, we'll find out why this has happened and whether the stock will continue to go down. So let's get started. Hi, my name is Dmitry, and the first thing I want to do is to compare Tesla with other automakers. Tesla has produced almost 1 million cars and has $5 billion in net profits by 2021. The top 10 automakers like Toyota, General Motors, Ford, Volkswagen and others produced a combined 50 million cars. That's 50 times more than Tesla, and made $100 billion in net profits. That's 20 times more than Tesla. But their combined market valuation is $550 billion, while Tesla is valued at $600 billion. Why Tesla is so expensive? To answer this question, we need to understand what drives Tesla's stock price. The first and the largest group of holders are speculators. They buy when the price goes up and sell when the price goes down, without even considering the company's business performance. For this reason, when a company has a bad quarter or bad news, they sell the stock and price goes down. The second group is speculative hedge funds like ARK Innovation, which is down 70% from its peak. And the last group of Tesla holders are ordinary fans of company or of Elon Musk. None of them do a full analysis of the company, which means that the first bad news or in a significant drop in the stock, they will sell their positions and it will be a crash. If that happens, we need to know when the stock will stop falling. It usually ends when the price becomes fair. I'll show you some examples. Sherwin-Williams, overpriced fall, fair value. Boston Beer, overpriced drop, block, overpriced drop. AMD, overpriced drop and fair value. Nvidia, overpriced drop and fair value. And Netflix, overpriced, undervalued and fair value, of course. So let's calculate the fair value of Tesla. First, I need to open a report for the last quarter and look at the income for the year. It's $20.81 billion. Then we need to multiply it by normal payback period. For companies like Tesla with more than $1 billion in revenue, that's 20 to 30 years. So we got a range of $256 billion to $384 billion. But that's not all. After that, I have to add to the first value of the range the equity that would be if the company went bankrupt. I calculated by dividing the assets in half and subtracting the liabilities from that number. I get $4 billion. That's the amount of money shareholders would get if the company went bankrupt right now. The first value of the fair price range is $260 billion. To get the second value, I add the equity, which is $30 billion. So after these calculations, we get Tesla's fair value range between $260 billion and $424 billion. But calculating this way is not easy and fast. So I created a service that can do it with one click. It's sfind.co. You have to type in the name of a public company and in a few seconds, you'll get all the information you need, including the fair value. Check it out by following the link in the description. Tesla's market capitalization is $672 billion, but the fair value is $424 billion. That's over 60% overvaluation, which means the current price is not reasonable. Thus, Tesla is overvalued and it's too risky to buy it right now. But there is a chance that as the company grows, the current price will become fair and the fall will bypass it. Don't forget to join my daily newsletter to get investment tips and undervalued companies. Thank you so much for watching. See you here next time. Bye bye.